U.S.-China trade talks resumed today after the months-long trade dispute over Chinese tariffs, intellectual practices, and also technology. Both sides now aiming to make progress before that March 1st deadline. Joining us now is Wells Fargo Investment Institute's global research analyst, Peter Donisanu. Great to see you, Peter.
Thanks for having me. Thank you.
First, your thoughts on the Fed decision before we dig into China.
Well, we think it's a market positive. It's in line with expectations, and we expect the Fed to raise rates 2 more times this year.
Okay. Now, you wrote a report titled China's Place in the World. What exactly does China want to gain from these negotiations?
Well, I think what China wants to gain in these negotiations is, from a long-term position, is to continue to participate in globalization that has led to its rise over the past 40 and more specifically over the past 20 years.
It's been very volatile between the two countries. We make some strides forward, and then it seems there are setbacks in the negotiations. Do you think that the potential to reach a decision, an agreement before March 1st is realistic?
We think that cooler heads will ultimately prevail here. So far, we've seen that on the Chinese side give on the intellectual property rights, on the joint ventures, opening market access to financial institutions in China. So we're seeing progress there. I think the big stone that needs to be moved is questions around economic policy and the central government's role in picking winners and losers.
All right, and the buzzword this earnings season has certainly been China. So many companies saying they're experiencing problems with their sales there, that they're worried about the tensions with China in terms of trade as they go forward, and that's why they're cautious in terms of their outlook. How does this situation resolve itself?
Well, in terms of the trade war, there's a lot of uncertainties going on. Let's just put it that way. And once we get a lot of these bricks off the wall, we expect that the longer-term trends, those of China's economy pivoting away from this production to a consumption-based economy, will lift and will support those corporate earnings in the long term. In the near term, we do still have a lot of uncertainties to deal with.
Even if negotiations do end on positive terms, potentially for both sides, China's experiencing problems with growth, and that's going to be an issue going forward no matter what. So some of the issues that are affecting growth today have to do with some structural changes that are happening in the economy. We think that the central government is working on introducing stimulus measures both on the central bank side and both on the fiscal side. We think those should at least prop up growth in the near term, but over the long term, we do expect slowing economic growth from. We're not going to see double-digit growth. Let's just put it that way. All right, Peter, great to see you. Thanks so much.
Thank you.